Curious about the national residential real estate market? We'll look at the 6 key national real estate market metrics and whether they favor buyers or sellers. At the end, we'll provide specific considerations for those wanting to buy or sell a home. Hello Central Kentucky. This is the National Real Estate Market Watch for August 2023, brought to you by Century 21 Simpson Associates. Let's dive into the metrics and trends based on the latest national market data from June. Months supply of inventory. Months supply of inventory measures how long the current inventory of properties would last at the current rate of sales if no new properties came on the market. 6 months of inventory represents a balanced market, favoring neither buyer nor seller. This month's data shows that months supply of inventory is moving in a consistent, if incremental, upwards direction. Over the past decade, the average MSI was 3.9 months, and in June it remained below average. Since March, buyers have benefited from a few more options each month. However, competition is still substantial, especially for the most desirable homes. With 3.1 months supply of inventory, this metric continues to favor sellers. Current inventory. Current inventory reflects the number of active listings as of the 15th of the month. The number of actives is not static and depends on when the report is run. A trend upward or downward from month to month can be established by using the same day of every month. The actual number of unsold homes on the market was 1.08 million and continued to stay above 1 million for the third consecutive month. As Lawrence Yun said, the American dream of homeownership has been a challenge for younger adults. High mortgage rates, along with the lack of housing inventory, have been the main hindrance. More effort should be directed toward raising the housing supply by focusing on worker training in home building and lessening barriers to construction so that once interest rates decline, there will not be a resurgence of rapid home price growth. National Association of Realtors Chief Economist Lawrence Yun continues to stress that the primary factor constraining existing home sales is a lack of available inventory. There are simply not enough homes for sale, Yun said. The market can easily absorb a doubling of inventory. Demand is strong. Listings are seeing more properties with multiple offers. Homes are moving quickly off the market. However, many sellers are reluctant to sell. They may have locked in low mortgage rates or not have inventory where they want to go, which means inventory and home sales. While buyers have a few more home options than they've had in recent months, sellers continue to have the upper hand and opportunity for multiple offers, quicker sales, and rising prices from increased competition. Existing home sales. The existing home sales volume is the total number of all the properties whose sales contracts were completed or closed during the month. At 4.16 million, home sales were down 3.3% compared to the previous month, a contrast to the normal seasonal trend of rising sales in the summer months. It's also down 18.9% compared to the previous year as a result of the 2022 interest rate hikes, a necessary step to ensuring broader economic stability. Regarding the home sales decline, Lawrence Yun commented, "The first half of the year was a downer for sure, with sales lower by 23%. Fewer Americans were on the move, despite the usual life-changing circumstances. The pent-up demand will surely be realized soon, especially if mortgage rates and inventory move favorably. Buyers may feel that lower sales could mean less competition. However, they will be in for a surprise. The number of sales right now has little to do with the degree of demand. Sellers who are ready to list their homes should not be discouraged. The lack of sales comes from the lack of homes to sell, not from the lack of buyers. While there are consequences for both buyers and sellers, the existing home sales metric is simply a gauge of market activity during this period and favors neither buyers nor sellers. Median sales price. The median is the price where half of the homes sold in any given area that month were cheaper, and half were more expensive. The median sales price rose to $410,200. Yun said, the national median home price in June was slightly less than the record high of nearly $414,000 in June of last year. Limited supply is still leading to multiple offer situations, with 1/3 of homes getting sold above the list price in the latest month. While this can help encourage sellers to list, it negatively impacts buyer affordability. Jessica Lautz, NAR's Deputy Chief Economist and VP of Research, said, for a home buyer, purchasing a home at $410,200 translates to a mortgage payment of $2,135. This is out of reach for many first-time buyers, as the median qualifying income would need to be $102,480. Sales prices are directly related to the continued levels of low inventory, so this metric favors sellers. Current mortgage rates. Interest rates vary by area, lender, and type of financing. For reference, we look at the national rate for a 30-year fixed-rate mortgage, which was 6.81% as of July 27. While June's interest rates were fairly steady, July's interest rates fluctuated, rising to 6.96% mid-month, then falling to 6.78% the following week. Although the economy is demonstrating forward-looking signs of stabilization and growth, Lawrence Yun believes the Fed is too focused on lagging indicators that show impact only in hindsight. He encourages them to pay more attention to forward-looking indicators. Interest rates are a big piece of the affordability equation for buyers. Each 1% increase in rates is roughly equivalent to paying a 10% higher price. Thanks to high prices and multiple offers, rising mortgage rates won't necessarily impact the sale of their home. Where they may struggle is facing the same issues as buyers if they have to purchase a new home. Days on market. The days on market is the average number of days that sold listings were on the market. Those days are calculated from the day a property is listed until it goes under contract. If there were any days the property was off the market, then those days are subtracted. Like last month, days on market are at a very quick 18 days. The average number of offers per listing was up to 3.5 in June, compared to 3.3 in May and 3.1 in April. This is a signal that there's a good amount of competition and is adding fuel to fire home price appreciation. This month, the number of offers above asking price ticked up from 31% to 33%. This is a great sign for sellers who may have feelings of regret for missing out on last year's market. And buyers can be encouraged that the competition is still down from the 51% level it was at in June of last year. Summer is historically the busy season in real estate. The market has shown signs it's returning to normal, but that balance continues to be a delicate one right now. Competition is heating up with more and higher than asking offers. Buyers must move quickly to make their decision. There is a ready supply of buyers willing to act fast, which means sellers can put their homes on the market with confidence. Now that we've covered the latest national housing market metrics, what do they mean for buyers and sellers? Let's consider what buyers and sellers need to know. Buyers. Days on market has rapidly fallen from 34 days in February to 18 days in June. That means homes are flying off the shelf again and signals that competition is heating up. Inventory is up, meaning that buyers have a few more homes to select from now. Mortgage rates are up and prices are rising again. Remember, you can always refinance as rates settle back down. Wouldn't it be great to make a move while all these factors are in your favor? Sellers. Timing the market is nearly impossible. The best we can do is read and react to the data available. Days on market is down to just 18 days, which means homes are selling faster. With the continued low inventory levels, well-positioned listings with a great mix of price and condition sell quickly. Prices are up. Median home price just hit the second highest level on record. Have your realtor run the numbers based on the market and see if that achieves your financial goals. It's best to act now if you're ready to sell. If you are interested in comparing the metrics in this national market update with those in central Kentucky counties, check out our local real estate market updates for Frankfort, Franklin County, Georgetown, Scott County, Lawrenceburg, Anderson County, Lexington, Fayette County, Nicholasville, Jessamine County, and Versailles, Woodford County. Have questions? Call our Frankfort or Lexington offices or reach out to one of our real estate agents. Please join us again next month. Thanks for watching.